This is Teddy Keckstedt from Forex Trading Unlocked, and we are here today with a Forex market breakdown for you on January 29th, 2020. Real quick, we want to show you our disclaimer just to let you know that this is for illustrative purposes only. And with that, let's just get into the heat of it. We're here at the www.forex-trading-unlocked.com website, and the workstation icon at the top, we've already clicked it. We're on it. We're going to pass to the calendar. We have charts loaded up. We got a lot to talk about. We have the coronavirus, which obviously is the thing that's really pressing on the markets right now. That is yielding strength to the US dollar. So let's see what's going on around the world real quick as far as trades. Right now, the euro pressing newer move lows today and is still leaning on support right now, down lower on the day. However, it did not take out this $09.81 level, which is our key support. This market is trending lower into Brexit, which is Friday. The beginning of the first phase of Brexit will be completed, and then we will be looking for the trade deals to be negotiated. But no matter what, come Friday, it is the beginning. We finally are here. Brexit is happening. So that is definitely weighing on the euro US dollar. There's the coronavirus. There's now cases of, or one case for sure in Germany. I'm not sure about the rest of the EU. We will be watching that. We know that the coronavirus is impacting the markets as a whole. It's giving strength to the euro or to the U.S. dollar. The U.S. dollar is always a flight to quality currency, just like the Swiss franc. And right now, we will see that it's just as it is in the euro, how it is impacting different trends. So right now, euro U.S. is in a bearish posture, only above this 110.83 area. Do we start to come off the bearish posture and become neutral? We did take out this head and shoulders line here, and we confirmed a failure, and the target signal is not hit yet. But once we take out this swing low here, if we do that, then we would probably get down towards this 109.5 to 109 area, and that puts us in our target range for this head and shoulders sale. So right now, we're still have a little bit of room to go to the downside. That's the technical driver right now, is to drive it down to this 109.5 to 109 even area. But we have the coronavirus. You compound that with the markets and dollar strength, that should also give a little bit more pressure. Right now, we're hovering above this key support. So if we take out the $09.81 level, that's huge because we take out the last higher move low after coming from a higher move high for the overall uptrend that this market has been in for a few months. And we will have confirmation then that this bearish correction is no longer just a bearish correction, but the beginnings of a bearish trend. So we will see how this manifests over the next couple sessions. But yes, as we go into Brexit, before the virus, I was looking for the euro US dollar to be in a sideways to neutral trade and be kind of dull. The fact that the bears are capitalizing on what's going on right now, and it looks like they're in a favorable position. I think that it will be a very interesting next couple of sessions. If you are a bull, I think you got to be very mindful that this is, if you're going to aggressive bull, this is probably a nice place to jump in, but you do not want to be long above this $09.81 area. Failure from there definitely has the bears pouncing on this market. So now we have the British pound US dollar. This will take us to the other side of Brexit, the main currency involved. As you can see, it's lower on the day, but it's inside yesterday's range and still going sideways. We've been looking for a sideways trade for this market to develop as we head towards Brexit, and we got it. So except for these four pivots here, I know there's really not much to talk about it. To the downside, I think if you're an aggressive bull or if you're a range trader, you want to be long above $1.2953. Targeting this $31.74 level. Any rally above here definitely would have us on a bullish breakout pattern posture that would have us targeting this $32.83, and then we'll see how things manifest after that. I wouldn't expect for this market to just explode like it did back here going into December, but you never know. Once we get past Friday, this market, it is a bull, and it has been for a while, so it's been consolidating, and as it's winding its coil, it may explode violently either up or down. So only a failure here from $29.53 has this market on edge, targeting this $29.01. Now a failure from there definitely would be a negative sign for the pound US dollar. I think the only way you really get this, I mean, considering what's going on with the coronavirus and how the pound has been reacting, that that's not going to happen. I think that the Brexit alone is going to be very bullish for the pound, and I think that the virus will be contained over the next couple weeks, so I think that those things will keep the pound in a neutral to higher posture. Only a really, really big excessive outbreak and really bad fundamental driver of the coronavirus, should it get bad, would I see this market becoming a bear. And we certainly hope that that's not going to happen, because that would not be good for the world as a whole. So now we're going to look at the US dollar Swiss. Remember, we talked about flight to quality. Well, the dollar obviously is flight to quality, and the Swiss is a good old flight to quality as well. It made a higher move high today. So on a fundamental basis, as far as technicals are concerned, besides the fact that the US dollar is strong, I think, against the Swiss because of the coronavirus, this is very bullish for the US dollar Swiss. It's in a corrective move. Overall, it's been a bear, but it looks like right now we have every indication that this correction is going to get pressed. Just like the euro is trending into Brexit, so is the US dollar Swiss, and we'll definitely watch the virus information. If all of a sudden things quiet down, then I would think your Swiss bull is going to come back against the dollar, because the Swiss still is a bull against most currencies. It's just right now we're getting a little bit of a correction right now that is extending, I think, all because of a fundamental driver. Because technically, this correction is pretty much at the extreme of where we will be looking for it to turn around and top out. So the fact that it took out this last lower move high, that right off the bat is a fundamental clue that takes us off the short-term bear campaign and puts us on the neutral forecast. And I think that you may get, as even if the dollar does grow in strength against other currencies, that the Swiss is going to start to slow up, because no matter what, the Swiss is a bull against the US dollar, or has been fundamentally and technically for quite some time. All right, we're going to look at the US dollar JPY right now and see what's going on here. This market too, it made a nice bottom 2 days ago, and I think you can key off that low at $1.871 and look for the market to make a challenge of this $9.70 key pivot. Any breach of this area here will have us looking to challenge this last high at 110.29 with an overall upside target of 112 to 113. Only a failure from $1.871 takes us off this rally forecast for a neutral trade back down for a slow grind back to 107.65. Now this market has been an overall bull versus no matter what the dollar was doing. The dollar's been a bull with against the yen for quite some time. So even though it's been bullish against other currencies the past couple of days, it hasn't been that way, or the past week against the yen. I think that's because yen is also flight to quality in their own time zone, and that's where I think, because of what's going on with China and the other countries around there, that's what you're seeing with that trade. Then we have Australian dollar, US dollar. This is a whole new another ball of wax. This has been a bear for a little while here. It had a head and shoulders. It hit its target. It took out this last low here, which is a big negative indication that this market's in the gutter for a while. Even if the dollar starts to fall against other currencies, I think the Australian dollar, because of the fires and then now what's going on with China, this is going to impact the trade as well as the Australian economy in a big way. So trading below this 67.54 pivot here definitely has us bearish. For downside targets, I can honestly say I think it's just going to keep on grinding lower. If we get a rally here, I think it's going to be a corrective rally to sell, unless we get a major turnaround where we have dollar weakness coming because the virus disappears and China balances itself out, which I still think is going to take at least a couple weeks before that occurs, which will keep this market on support no matter what for quite some time. New Zealand dollar, US dollar also is exhibiting some really key weakness. It made a lower move low again today, reversing yesterday's slight gains. It looked like the market wanted to slow down and hit and just at least start to go sideways. Not so. This trend is grinding lower now, not looking for sideways action whatsoever. So range traders and bulls, I think you're in trouble. This market definitely is indicating that it wants to continue to go lower. Now we're going to look at one interesting little rally that's going on here with the US dollar Canada. It is pressing higher move highs again today. We thought this correction was going to run out of gas. Not so. So now we're looking at this upper blue level here at $1.3248 as a key resistance target to go with this dollar strength run that we have going on today. I think the extent of the trade is done. But going into tomorrow and into Friday, I think we have a good shot at hitting this $1.3248, especially as the virus woes continue to pressure the market. Only a big turnaround drop in, if we start to get a decrease in the number of cases in China and what have you, then I think that will help to aid this as being the target, and then we can have a nice reversal off of here. The overall trend for the US dollar Canada is lower, so this is a corrective rally. We are looking for it to stall eventually. I think the only thing that can push this really higher would be dollar momentum that once again would be virus related. But the big market to watch once again here is the Euro US dollar. Let's see if it trends through this pivot over the next two sessions, because if it takes out this $1.0981, well, I think we could start to see the euro start trending lower in a way that it has not done for over a year. So we don't want to get in front of ourselves, but I just want to give you a little foreshadowing as to what may be something that we could really start to look for and capitalize off of. So right now, if you're a bear like I am, I have been since Friday, you're riding this one down and you're looking for this failure here. And let's see if we can get down to 109.5, 109 even before we look to take profits and get out of this trade. So with that being said, please like, follow, and subscribe to our YouTube channel and on LinkedIn and other social media places. And also that way you get notified when we're streaming live for videos like this, or we upload lessons and things like that to our YouTube channel that are tools for you to help to improve your trading. So with that being said, always use a strategy, have a good money management plan in effect for your trading. Always use stops, and always pay attention to both the fundamentals and technicals, because they all impact the price action that is the market.